Hey there, mortgage community. So if you want to stand out in 2025 and close more deals without drowning in paperwork or chasing endless pay stubs, you really need to learn about DSCR loans because they might be the golden ticket that you've been looking for. So in this video, I'm going to walk you through how to originate DSCR loans as a mortgage broker, step by step. I want to talk about why the niche is exploding, how you can get started fast, even without an NMLS license in every state, and the exact steps you need to follow to close more deals with real estate investors this year. So let's dive in. I'm Megan Marsh, and I am here to help loan officers, mortgage brokers, and real estate entrepreneurs really find financial independence and business independence. Thanks for coming to our channel. If you haven't ever come to our channel before, make sure you hit that subscribe button and the bell so you get notified as we release a video for you every week. Let's talk about number one, why DSCR loans are hot in 2025. Here's what you need to understand. In 2025, the best loan officers didn't just do loans, they have a strategy, a niche, a reputation, and working with real estate investors is one of the best and fastest growing niches out there across the country for a few reasons. Over 18%, I've even seen it as high as 25% of all 1 to 4 unit homes purchased in the US this year are being made by investors. So that means of all the houses out there that everyone's fighting for, 18 to 25% of them are investors. And how many loan officers do you know that are focusing on this niche? I bet you not a lot. That's up from around 13% before the pandemic. The translation? The investor loan space is booming and they need loan officers who understand their needs and can move quickly and has really good products. Now let's talk about number two. Why do mortgage brokers dominate this space? So if you're going to do it right, you want to do DSCR loans as a mortgage broker. I do not recommend doing DSCR loans as a niche if you're in retail, and here's why. In the broker space, there are so many more lenders and options. The DSCR guidelines vary a lot. You want to have flexibility to use all different types of lenders. The DSCR loan has become so popular that some of them now are being pooled and sold just like Fannie and Freddie loans, and so traditional wholesale lenders and even some retail lenders are offering DSCR. And I don't even recommend loan officers use a conventional bank to do their DSCR loans. I recommend going out and finding the niche lenders. Lenders will allow buyers to purchase an investment if it's their first piece of real estate, where some will not. Other lenders will want the investor to use their own funds, while there are DSCR lenders that allow gift funds or equity for all of the down payment. There are DSCR lenders that want 25% down, 20% down. There's even some that say 15% down. You can originate DSCR loans in most states without an NMLS license, as long as the home is not owner occupied. This means that if you're a loan officer licensed like in PA and Ohio, you can still originate a DSCR loan in North Carolina, Mississippi, and Texas. And best of all, these loans are actually easier to process and close. If I've convinced you, how do you start originating DSCR loans? And here's the steps and how I started doing it years ago. First, you have to educate yourself and learn how the DSCR loan works. And you can do that by reaching out to your account executives at the lenders that you're signing up with. They're going to walk you through because each of their processes may be a little bit different. Now, DSCR stands for debt service coverage ratio. It's the property's income that matters here, not your borrower's monthly income at the job that they have. Know how to calculate the ratio, understand the terms, LTV limits, interest-only options, prepayment penalties, and most of all, know what documents are needed. Lease agreements, property operating statements, rent schedule from the appraisal. Make sure you understand LLC entity structures, as many investors want to purchase in an LLC name. Then sign up with 5 strong lenders that specialize in DSCR and compare their niches to make sure they do different things. One may allow short-term rentals. Others may have a lower DSCR threshold. A third might offer a non-recourse option for the LLC. You really want to diversify in products so that you're not boxed in when someone comes to you and has a question And you have a product for that. One last piece of advice that I have on the topic of lender choice, especially if you're a residential loan officer, is to not use your strong A lender. As I mentioned that before, if you're comfortable with DSCR loans, go out and find different lenders. I've seen this over and over again where loan officers will lock their DSCR loans at their residential lender, and 50% of these deals, I swear, end up having a problem and have to be moved to a different lender. That's what's happening to you if you work in retail. There's a problem, something comes up, what do you do now? This is because A lenders have added this product to their offerings, but they really only have 1 to 2 core options. They don't have the depth of multiple lenders. Meet with each lender's account executive, like I said before, set up a Zoom, ask for their loan guidelines, learn what their loan terms are, confirm what your comp structure is, what kind of seller's assistance is allowed, like all those things, people ask us. And this will help you quote accurately and legally when working with clients. And then the last step is start to strategize to set up how you're going to put yourself in a position to be successful, to get clients, to attract the people who need these loans. Now, I'm going to share one secret weapon that most loan officers miss when they do these. The rent schedule in the appraisal is what will make or break your deal. If that rent estimate is too low, your DSCR ratio might tank. So be proactive. Know what it has to come in at. Build a step in your process. Have your team reach out to the listing agent or seller to get real market rent comps or to show what the rent really was at that property if it's higher, so that they can pass it along to the appraiser and tell the appraiser what you guys are looking for on that rent schedule. Is it smart? You bet. Is it effective? Absolutely it can be. Does it solve every DSCR loan? No. And then the last step, create a lead gen plan. It doesn't matter how great you are. If nobody knows you exist, you are going to sit there twiddling your thumbs. Pick a strategy and go deep. YouTube channels with investor education, do paid ads targeting landlords and flippers, in-person networking events for investors and agents. Position yourself as the go-to for these DSCR loans. And so let's just recap everything I just went over. DSCR loans are in demand. You can originate them in most states without having a full NMLS license. They're easier to close and require less documentation. You can carve out a powerful niche helping real estate investors build wealth. But you've got to take action. If you want to help build your DSCR game plan or joining a brokerage model that gives you access to lenders, training, and done-for-you operations, check the description below and book a call with me. I can give you an introduction to mortgage brokers who know how to do these loans in their sleep and have the depth of lenders and create a business you can dominate. Don't forget to like, comment, subscribe for more mortgage information and training that you need as a loan officer, as a broker owner. Otherwise, make sure you hit that subscribe button and the bell. Until next time, go make it happen.